Hello and welcome. The International Monetary Fund, in its latest update, revised its India GDP growth forecast for FY24 to 6.3%. That's 20 basis points than that was earlier estimated. India and China together are expected to contribute nearly half of global growth in both 2023 and 2024. To share his perspective on domestic as well as global developments, we have with us Krishna Srinivasan, Director for Asia Pacific at the International Monetary Fund, here with us today. Thank you so very much for taking time out.
Thank you, Pallavi.
So, to begin with, I'd like to ask you about global growth developments. We do expect slower growth in the current calendar year compared to what we had seen last year. There's a lot of pull-in pressures at the global economy at this juncture. What's your takeaway?
So, as you rightly said, we have a forecast global growth slowing from 3.5% in 2022 to 3% in 2023 and to 2.9% in 2024. The one point which I would make is growth is slow, it's uneven, there's a lot more divergence. We have revised up the forecast for the US, we have revised down the forecast for Euro area and China. So that is an important part to make. More importantly, I would say, if you look at the projections we had made in 2019, pre-pandemic, for what output would be in 2024, only one major country has met that, that's the US. Every other country is below its pre-pandemic trend. China, 5% below. EMDEs, emerging market and developed economies, 6%. So there is a lot to catch up. In terms of inflation also, what we've seen is global inflation is coming down. In fact, inflation has come down, headline inflation has come down in 75% of the countries, or 75% of the countries around the world. It is coming from a rate of 9% last year to 7% to 6%. You compare that with where Asia is doing better. Asia, we have, do you want to go to Asia now? Can I get, yeah. So Asia, we have growth at 4.6% this year, slowing to 4.2%. And in Asia, inflation is coming down much faster to 2.8% this year, 2.7% next year. So compared to the rest of the world, Asia is still the more dynamic region. And as you said, between China and India, contributing 50% of global growth.
So before we can delve a little bit more into developments in India, I do want to ask you, what are your thoughts on China at this juncture? Lots happening. The first half of the year was a tad bit better than was being expected. What's the way forward? How much of a risk is China perceived to be for the global economy?
Again, a very good question. So in China, what we saw is that in the first quarter, after they opened up, the economy rebounded very sharply, 2.2% first quarter growth. Second quarter, 0.5%. So it slowed down significantly. And now the most recent numbers which came out yesterday is at 1.3% in third quarter. So overall, put these things together, we think China will reach a growth rate of 5% this year, but slow to 4.2% next year. So the question is, what's happening in China which makes us worried? I think the big problem we have right now in China is the real estate crisis. There, we have seen some signs of stabilization at the beginning of the year, but stabilization has not endured. If you look at any index of investment, starts, sales, prices, all have been going down. This is a sector which needs to be resolved. Now, it's clear the Chinese believe that this sector was too large, it was too leveraged, and so they wanted to bring it down to a smaller size, more sustainable, which is fine. But at this point in time, the key issue here is, do they have a strategy to restructure the developers? Some developers are in good shape in terms of balance sheets, others are not. But until you resolve the developers who are not in good shape, you're going to have a confidence problem in the sector. If the confidence doesn't come back, it's going to affect consumption, it's going to affect investment. So that's for the short term. So when I say short term, this is the key overarching priority of what they have to deal with right now. Going beyond that, we have China slowing to 3.4% in 2028. So medium-term growth in China is going to be slower. That's partly because of productivity declining, an aging population, and the economy not rebalancing towards consumption. So as China slows, it has a big bearing on Asia, the rest of Asia, because a number which I like to quote is intra-regional trade in the region, intra-regional trade in Asia is anywhere from 50 to 60%. A large part of that is China. So if China slows, Asia slows, and the world slows.
And moving to India, what's your reading? So we have seen a revision in IMF's forecast for India. However, the second half of the fiscal is expected to see slower economic activity than we saw in the first half, and growth is expected to be a tad bit lower for the next fiscal year as well. All of this while India still remains a bright spot in terms of the global perspective. So what's your reading?
So India is among the fastest growing economies in the world right now. Relative bright spot, 6.3% this year, 6.3% next year. We've revised our projection from April, partly because there was much stronger consumption, much stronger investment. Services exports are doing well. So overall, growth numbers look pretty good for India. Inflation is coming down. The most current reading was 5%. So inflation, it had gone up a little bit because of vegetable prices going up and so on, but it's coming down. So we expect, inflation to come down to target in 2024. So in terms of growth and inflation, India is in a reasonably good spot. Of course, if China slows, the question is, does it affect India? And there I would say the linkages between China and India are not that strong. I think our trade is about 4% export share. So if China slows, it may not have a material impact on India. But there are other factors which could be headwinds to growth. For example, the external environment. We've had shock after shock after shock. Now, the most recent shock, what does that mean for energy prices? What does it mean for demand broadly from the region and the global elsewhere? So those are key, what I would call as headwinds. But there could be tailwinds where consumption is stronger, investment, the capex spending, the government has refocused the fiscal to put more emphasis on capex. If that is stronger, you do have upside risks too. And service exports are doing well. So there are upside and downside risks. So we think at 6.3, it's a good balance in terms of what we project India will grow at.
I do want to delve a little bit more into a medium term outlook. So, how long is India's runway for growth? What China was doing all of these previous years, do you think India can do for global growth the next few years?
So again, if you look at where India is today in terms of per capita and where the advanced countries are, there's a lot to catch up. There's a lot of convergence out there we can do. So in terms of potential, yes. So over the medium term, India can grow pretty fast. One has to build on where we are today in terms of the macro fundamentals and embark upon structural reforms, which you could call the next generation of structural reforms. India has done impressively well in digitalization. It's a leader of the world, whether it's digital public infrastructure, whether it's digital technology through CBDCs. All that has led to an increase in financial access, financial innovation, financial literacy. So all that is great. Similarly, there's been a push on infrastructure. Right? If you look at the quality of the roads, if you look at the quality of the airports, pretty much state of the art. These are all good developments, but there are areas where India needs to step up. What are some of those? For example, trade reform, trade restrictions need to be removed. More recently, they have imposed trade restrictions on some commodity exports, some on imports. These restrictions, there are, for sure, there are domestic compulsions, but the risk is that one country starts doing it, it's bigger than neighbor policy, others start doing it. So where does it? So on trade, there's a lot more to liberalize. Improving the business environment, still find people, for investors, when you talk to them, they say that it's hard to do business in India. Continue to push on infrastructure, labor reforms, land reform, agriculture reform. So there's a large menu of reforms which need to be done. They are not easy. They will require consensus building between partners, both center and state. But these are the kind of reforms which can help India meet its potential going forward and raise its contribution to global growth.
Alongside a lot of these aspects that you already touched upon, what about other structural issues like India's inability to be able to generate enough jobs, considering its population? How are you looking at some of these? Also, continuing scarring, if any, on some parts of the economy, the informal sector, for instance?
So I think when I talked about structural reform, one important reform which I skipped talking about is education reform. I think we are producing a lot of graduates, a lot of engineers and so on. Do they have the right skills for the modern economy, right? So even as growth picks up, we have to keep reskilling our labor to make sure that the demand for labor is met by the right kind of supply. Now, there's a debate in India or among some people that we may have missed the manufacturing boat and we've gone straight to services. I think it's a false debate. I think we can do better on both fronts. India has an English-speaking labor force. Infrastructure is getting better. So there are many things which are working for India. So I think if we do the reforms which I elaborated, including on education and health, the potential is great, both for growth, and you'll also have a labor force which will be absorbed by a growing demand. One area where India could also do better is on female labor force participation, which is very low in India. It's at about 29%. That could also go up, in terms of improving our productive potential and so on.
So a lot of these reforms that we've spoken about have been structurally hampering India's growth for several years now. Post the pandemic, another one which has come to the forefront appears to be inequality. And on that front, India does not appear to be alone. That is a phenomenon that seems to have increased in a lot of countries globally. So at what juncture do you feel there is need for targeted measures to handle rising inequality?
So inequality and poverty did rise across the world during the pandemic. The people who lost jobs, the people who were not getting support, lots of lives and livelihoods which are lost were all at the lower spectrum of the income. So inequality and poverty did go up. Now the question is, we take it forward in the context of the pandemic. The government provided targeted support to those who needed it most, which I think was very, very good. And that was targeted because in many ways, once you saw the pandemic waning, that kind of support was pulled back. So it's important that we continue to provide support to those who need the support, but in a very targeted way. But again, it's not just about providing cash transfer, it's also getting them into the education force, the labor force. How do you educate them? How do you provide support so that the training, the education that was lost in the pandemic is recouped? I think all of Asia, the scarring, you talked about scarring. The scarring which manifested in Asia was largely through education. People dropping out of schools, college, and so on. There needs to be catch up there. And that's where I feel the digital technology, digitalization can and is playing an important role in catching up. But this is an area where we have to invest. When I say India has to invest more to be able to get the best benefits.
Okay. So one last question. Every now and then, back here in India, we do have issues around data quality. So for instance, some of our databases are in need of being updated. What are your thoughts at a global level? Are these concerns as yet to institutions such as the IMF?
So the way I put it is, we have data quality which is sufficient for our surveillance. When I say surveillance, we have familiar with the Article 4 missions come, so it's sufficient for that. But as you said, there are significant gaps. There are some surveys which are very dated, which need to be updated. Labor market statistics which need to be improved. So again, this is an ongoing exercise, and I would like to believe that the Indian government, with the help of partners, including the IMF, we provide a lot of assistance on data on these things, could help could improve data quality. But again, as of now, it's sufficient for our surveillance, but improving data is an ongoing exercise. It's a real public good.
On that note, thank you so much for taking time out for us today. This was a pleasure.
Thank you, Pallavi.